But I think that's more of a problem for the VCs than for the companies, really.
Hi, Édouard. So very nice to have you on Aulium.
Hey, Thomas. Thanks for having me.
So you're now a VP of payments at Mambu, which is a global cloud banking platform. Before this, you were the founder and CEO of Numeral, so a fintech in the payments infrastructure space, which you sold to Mambu relatively recently. Before Numeral, you were at IbanFirst, which is a European fintech that helps essentially businesses manage foreign exchange and cross-border payments. But before IbanFirst, you were not in the payment space. So really my first question for you is how did you end up in the payment space? And if you could maybe elaborate on your early days of your career, that would be a good starting point.
Of course. So I graduated in 2012. It's been a bit more than 10 years ago now. And my first job out of college was at a company called Rocket Internet that back then was building e-commerce businesses in emerging countries. And I was part of the team that launched a company called Jumia in Morocco, Egypt, and Nigeria, and scaled it across Africa. And that's Rocket Internet and Jumia was doing finance, very corporate and operational finance, working with the group CFO to build finance teams in the companies in the country. So hiring, training the teams, deploying the tools, putting reporting in place and stuff. Mm-hmm. And e-commerce is many things. And e-commerce in emerging countries is even more diverse. And a lot of e-commerce is actually payments, collecting payments from buyers, paying out merchants or suppliers. Mm-hmm. So my first foray into payments and very much into payment operations was actually at Jumia. So more on the actual business and customer side.
Okay, so this is how you essentially discovered the world of payment. And after Rocket Internet and Jumia, so you went to IbanFirst. So
exactly.
How did you make the move essentially, if you remember?
I very much remember. So at Jumia, so I was finance project manager, and I was already working a lot with product and engineering teams to build the tools and the systems that the teams that were building and managing were using on a daily basis. Mm-hmm. So I was already a de facto product manager or product owner. I did not have the title, but I was doing a lot of what a PO or PM would do. And then I joined IbanFirst to become a full-time, full-fledged product manager, a fintech in a payments company, as a matter of fact. And at IbanFirst, I work on the core product and the core payments and FX infrastructure. And when I joined IbanFirst in 2017, we had two partner banks. So banks that were holding our accounts and enabling us to access payment schemes and send and receive payments. And when I left, we probably had 7 to 8 partner banks. So we built a lot of new banking relationships, and we had to integrate with a lot of new banking partners. And building and maintaining these technical integrations was quite complex and expensive in the end.
Okay, and so this is where you essentially identify maybe a gap in the market and you started thinking about Numeral. So how did you essentially got the idea, or how did you spot that gap?
Yeah, exactly. So IbanFirst was very much into building, so building their own products, their own integrations, as opposed to buying them from a software vendor. And there are a lot of good things in building, but there are also some limitations, resources, roadmap, maintenance, total cost of ownership that can explode over time. And we looked at existing options on the market, so software providers delivering solutions that we could use, and we could not find anything very satisfactory. They were like treasury management systems tailored to corporates and treasurers. Mm-hmm. They were very packaged core banking systems that were doing everything, the ledgers, the payments, the reporting and stuff. And there was I'd say like legacy payments platform that had been built like 10, 20 or 30 years ago that or probably not a great fit for a fintech like us. That was in 2020, 2021. And I decided to move on and build my own company. I've been working for startups, small, medium, and large for almost 10 years,
Mm-hmm.
and decided to partner with Hichem, who's my co-founder and CTO, and a startup studio called Hexa to launch what.
So you met him through Hexa, or you knew him before?
I met him through Hexa.
Okay.
I knew a partner from Hexa who wanted to launch a project in the treasury or payment management space.
Mm-hmm.
And we partnered, and then we partnered with
Okay, so yeah, it was like, let's say, a coincidence, but a good coincidence. So you saw like a gap in the market. You wanted to start your own business, and at the same time, Exa told you, we are thinking about the same problem. Let's work together.
exactly.
Okay, great. So maybe to let's say start on the payment world. So for most of us, payment is really, I take my card or I send a bank transfer. And I don't really think about, the background and the infrastructure. I think it may be the case for most of, infrastructure out there. But so can you explain how it actually works? Because for me, it always felt instantaneous to pay, and very frictionless. But would you mind like explaining how the system works in simple words? That would be great to essentially understand the place of Numeral and maybe Mambu in the entire market.
Of course. So there is a lot happening in the background
Mm-hmm.
that we don't see, and we are not supposed to see it. If we see it, it means that something is not working. Everything starts and ends with the customer, an actual customer, which can be you and I, which can also be um, businesses in all shapes and forms. So a customer sending or receiving a payment. To do that, you go through what we call a payment service provider, which can be a bank or a fintech that will hold your account. You have an account with them, you have funds, and you use that account to send and receive payments. That payment service provider will either access to the payments networks, we call them payment schemes or clearing houses, either themselves directly, they are directly connected, or through their own partner bank that we usually call a sponsor bank. And the sponsor bank will in turn be connected to the payment scheme or network or clearing house. And then you have the other side of the transaction, which is the beneficiary that has its own payment service provider that will have its own partner bank that might or might not be directly connected to the payment schemes and networks and clearing houses. So there are a lot of intermediaries, and depending on the exact setup, there can be more or fewer intermediaries. And we build the pipes, the technical integrations between the payment service providers and their partner banks or the clearing houses. And we
Okay.
essentially exchanging payment information, payment messages
Okay.
that
So
describe what payments looks like.
and so in parallel, so maybe people have heard of SEPA, so the single euro payment area in Europe, which harmonized the payments across 40 different countries. And today, something like 90% plus of all transfer are going in the eurozone are going through SEPA. Would you mind explaining why it's important to understand SEPA, what it means in terms of infrastructure, and maybe elaborate on that?
Of course, so SEPA is both a regulation and a rule, and it's a regulation that mandates all euro-denominated payments to adhere to what we call SEPA rule books, or to
Mm-hmm.
SEPA schemes and SEPA rule books. And rule books are a set of rules that SEPA participants must adhere to. And these rules, they describe how you send and receive payments, how you manage rejections and returns. They also describe the format of the information that is being exchanged. For instance, for SEPA, all SEPA payments are exchanged using what we call ISO 2022 messages. XML message.
What does that mean in practice?
It's a file format, structured file format that describes what a SEPA payment looks like, and it looks like the same across all SEPA countries and all SEPA participants and all payment service providers, meaning that we have 40 countries that are almost fully interoperable from a payment perspective, and sending SEPA payments from France to France or from France to Belgium or from France to Austria is the same.
Okay, and so before that, essentially, if I were to send like bank transfer or to someone or a business in Italy, the message maybe structure was different. So at the border, there would have been some sort of problem in translation. So that was the issue, and now it's harmonized.
Exactly.
And what did happen? So I mean, if it means like the transfer was blocked for I don't know how many days before being cleared, or
So it means that it might have through intermediary banks, the format of the payment message might have to be updated. And every time you update something, you risk breaking it. So there
Mhm.
might be exceptions, delays, additional costs and stuff.
Okay. And so since January 2025, so all banks and payment providers in Europe must be able to receive instant payments, which means in less than 10 seconds, and this every day of the year. They must also be able to send them, I think like starting now, like October 2025. So what does it mean, and what is like essentially the impact on the end users, which would be like businesses and customers, etc.
I think so for customers, so individuals and businesses, it's a major change. It has accelerated payments drastically. Before, it used to take 1, 2, 3 days to send and receive a SEPA payment. Now it's taking 10 seconds, meaning your salary gets paid faster, your insurance claims get paid faster. You can also pay your own rent later because it takes less time to arrive on your landlord accounts. There is much less idle cash or cash sitting somewhere between banks and the payment networks. Cash is either on your account or on your counterparty accounts.
Mhm.
What it has changed for payment service providers and banks at large is that they've had to go from a Monday 9 a.m., Friday 5 p.m. ways of operating to a 24/7 ways of operating. Their core banking system, so the core system used by banks to hold customer accounts, manage accounting and reporting, are not real time. They were typically not operating outside of business hours and branch hours. If you wanted to send or receive payment outside of business hours, you could not. Your account balance would not change. And they've had to completely revamp their systems to go from batch-based systems to real-time systems. And it applies to core banking systems, the ledgers and the accounting, but also, of course, to payment systems, just like what we are building at Mambu Payments.
Okay, understood. So now that we are experts on the payment space, thanks to your 10 minutes explanation. So before its acquisition, Numeral was already like processing a fairly huge amount and huge volumes of payments like every year. You were working with really like, let's say, top or very large banks like BNP Paribas or Barclays. Can you explain what is and what was Numeral, and how essentially you managed to convince those ultra large institutions to essentially work with a small startup on topics so sensitive as infrastructure? So imagine even if your systems were 1,000 times better, those large institutions may have in mind, okay, if we use them and if there is a glitch, it's going to break and we are going to lose like X million billions of revenue, etc. Whereas even our like legacy programs, at least they are super robust and we know them. So how did you manage to so what was Numeral, and how did you manage to essentially convince those very large institutions to work with you in the first place?
So actually, we started not working with these large banks, but working with their customers that are also our customers, so joint customers. So first, we went to fintechs and banks that were themselves customers of BNP Paribas and Barclays, and we positioned Mambu Payments, Numeral back then, as the best way to integrate with these banks and to process payments with their banks. We are building APIs on top of these banks' cash management channels, most often legacy cash management channels running on SFTP servers and ABIC servers and file-based communication. We're building APIs, modern APIs, easy to integrate APIs on top of these legacy cash management channels. And we're proving first to customers that it was easier to integrate with these banks with us, through us. And then once we've proved it to these fintechs and banks, we are able to go after their own partner banks, BNP Paribas, Barclays, and say, look, we make it easier for your customers. They go live faster, they generate revenue faster, they cost less to support. Why don't we partner and why don't we do it at scale for more of your customers and more of our joint customers? So we turned technical relationships, because we had technical relationship with these banks as part of our joint customer projects, into first, I'd say, like informal partnerships with specific teams, sales teams that could see their own interest in acquiring these fintech and bank customers, and then into actual commercial, more formal partnerships that obviously took way longer to build, because you need to build the trust, you need to prove the value, and you need to go through all chain of command and chain of decision
Sure.
you find in banks, which takes time for most often for good reasons, and which has a lot of value because it's also difficult to replicate for competitors.
I'm sure. So essentially, your objective was your objective to get to those big banks, and essentially your go-to-market was to go through their clients and partners, or did it happen like this? Essentially, you started working, let's say, with the easier ones, and then you discovered, later. Was it planned, or was it something you discovered along the way?
So we knew day one that partnerships would be a very important go-to-market for us, would be a very important distribution channel for us. And then we did not go through the door. We went through the window, and the window was the customers. And now we can go through the door more and more.
Okay, understood. And so looking back, what did the very first version of Numeral product look like? And did you go through many pivots since you started, and then when you exited, when you sold to Mambu? I mean, was relatively quick. So I'm wondering, did you get the first product right, like straight away, or did you have to iterate on it quite a lot?
No, I think we got the product vision right day one.
Mm-hmm.
It's the same product vision now, and that it was like for a bit more than 4 years ago now. But the first product, I mean, because the product vision was and very much remains very ambitious, the first product was very limited compared to this vision. It was doing very limited things compared to what we do today, and also compared to what we want to do tomorrow. But it was already solving a pain and creating value for our customers, and we are able to sell it. I think we started Numeral officially in July 2021. We closed our first two customers in July and August with an MVP, which was really a prototype.
Very quick, yeah.
So it means that the product vision was right, that the pain was acute, and that there was some value. After, it was a matter of actually building the product, and it's a complex product. It's payment infrastructure, so it takes time, people, and money to do it.
Okay, and were there other solutions maybe doing the same as you? Is there any, let's say, competition in the sort of innovative space?
Yeah, I think that there are two, maybe three actually categories of competitors. The first category is our customers themselves, and our customers deciding to build their own payment infrastructure. And it's especially true when you sell to either fintechs that are tech companies. And when you're a tech company, when you have good product managers and software engineers,
Yeah, you
you
want to
are very
build.
tempted to build everything because every solution is a challenge, and every challenge is exciting. So that's the first category of competitors. That's indirect competition, but that's very much competition. The second category of competitors were software that we call bank connectivity solutions or payment hub. And that's really the category that we identify ourselves with now. And these companies in the UK, for instance, a company called Bottomline, they have their equivalent in the US called Volante. And you also find some payments hub from most core banking system providers now. So the large core banking system providers would be Temenos, Avaloq, Finastra in Europe. In the US, it would be Fiserv or FIS or Jack Henry. All of these guys have a payments hub, either packaged into the core banking system or as a standalone product. And then there is a third category that we kind of identified ourselves with at the beginning, which are treasury management systems, because they enable companies to connect to their partner banks and access their accounts and send and receive payments. But that's a slightly different, very different customer base, mostly of corporates and also user base and personas of mostly finance managers and treasurers.
Okay, understood. And so to execute on that vision, so you had to raise some funds. The latest round you did was in 2022 with Balderton, where you raised like 13 million euros and other like well-known angel investors. So that's a fairly strong endorsement for a young fintech, let's say. I mean, what were the hardest moments in the fundraising process? How did you run the process? I mean, did it take a long time for you? And also, maybe because the payment infrastructure space is, let's say, something so complex, do you think you had to spend a bit more time educating the people in front of you? Because even though, I mean, you meet tons of smart people, I mean, really either you know it or you don't know it, and then it takes like maybe years to become an expert in that space. So yeah, how did you essentially structure your fundraising process? And what about like educating people in the process because it's such a specific space?
Yeah, that's a good question. And I think we'll see a lot of parallels. I mean, thinking about it now, I see a lot of parallels between our fundraising and our acquisition. And I think it starts with a smart investor or a smart buyer. So people who know the space, the players, who know what good looks like, also know what they need in terms of portfolio or investment portfolio or uh, company acquisition. It was in late 2021. We did not run a process. It was a preemptive round from Balderton that we were quite close with, that had a very strong conviction on the space. They knew that they wanted to invest in a payment automation company in Europe, and they were looking for the right team to invest in, with enough signals to validate that it was the right team or the right product or the right market or the right positioning. It's all about signaling at that stage, because I mean, when you are like a 6 or even 12 months or 24 months old company, there is not much more to show than signals, and very often weak signals more than strong signals. So long story short, we did not run a process. It was a preemptive investment that we closed in a week, and then it was a bit
So
of
yeah, so you had relationship with them for a number of months. Then one day they contacted you, hey, we're interested, here is a term sheet, and in a week it was done.
more or less.
Okay, so dream scenario
Exactly.
for
And looking backwards, it was end of 2021, early 2022. So if you remember, it was like the peak of the fintech investment, really the peak of the wave. All the VCs were looking to invest in fintech. All VCs were doing preemptive rounds, which also explains the amount and the valuation, which is just a function of the amount, really. So it's also linked to the context. conjectural
And so
context.
how does that happen? Like, so a preemptive round like this, I mean, how did they know you needed maybe 13 million to execute on a series of milestone? I mean, yeah, they contacted you and they said, okay, we are interested in investing X much. Did you have some form of conversation at least?
No, it's more, we want to catch up. We want to know what you guys are doing, the progress that you've made over the last few months. And then you say naively that you might consider raising 6 to 8 million in the spring. And then they say that they might be willing to look at it now. And then the 6 to 8 become 9 to 10. And then you want to give a bit of room for angel investors without diluting yourself more than you initially planned. So you increase the size of the round and the valuation accordingly. I mean, and I think it's changed quite a bit. I mean, in fintech, but probably you see the same behaviors in other verticals like AI or maybe cybersecurity. Just a matter of investors have a strong conviction on spaces, on problems, on teams, and they want to be in, and they're willing to pay more than others, and sometimes a lot,
Okay.
to be able to play the game. I think it's a matter of playing the game.
Mhm. And so there wasn't like a, yeah, as you said, like a proper process. So, but you had relationships with Balderton, but I imagine fairly early on you started developing some relationships with a number of VCs you knew were interested in your space, I guess.
Yes.
Well, I had a question like, what would you change about the fundraising process? I mean, I guess that's a dream scenario, so you wouldn't change anything really. Okay, so then in December 2024, you announced that Numeral was being acquired by Mambu. So again, like a global cloud banking platform. Same sort of question: how early did those conversations start? How long did it take to turn it into a deal? I imagine, boy, you essentially worked together, maybe, or what was the genesis of the transaction?
Yeah. So as I was saying, partnerships were an important aspect of our go-to-market. It was mostly partnerships with banks on one side and other software vendors on the other side. And among these other software vendors were core banking system providers, because a payment sub almost always sits on top of a core banking system. And Mambu was one of these core banking system providers that we had not a formal partnership with, but at least commercial relationships with since 2023. The relationship further developed when we hired one of their solutions engineer as our founding solutions engineer, so our first solutions engineer, which created more bridges and glue between the two companies. We were working together on some commercial opportunities, so responding to RFIs and RFPs together. We had shared Slack channels uh, um, across a number of teams. So already working with them quite closely and validating the cultural fit and the business value of working together. And that was 2023, early 2024. And in early 2024, they came to us, they came to me to tell us that they wanted to acquire a company in the space. They had their own payments platform that they wanted to replace.
Mm-hmm.
And we were shortlisted as one of the companies that they wanted to have discussions with. And we started discussing. You have to discuss when you get such signs of interest. And we discussed throughout the first half of 2024, and things accelerated in the summer, and we
Okay.
signed an LOI
Mm-hmm.
in late September, early October, and we closed the acquisition in early December.
Okay. And was there any sort of catalyst or pressure maybe on their side to do a deal? Because I imagine most deals happen when you have some form of time pressure. So for them, how did you maybe build up that time pressure, or did they have something on their side? So, I mean, you mentioned that they wanted to replace their own their own current product at the time. So maybe that was one thing, but was there like something external that essentially pushed the deal to happen? Maybe it's something you created in the process.
So on their side, I think it was first a matter of products and positioning and value prop. Their product was not a great fit for a lot of their customers, for most of their customers, from a functional and technical perspective, meaning they did not have the best possible value proposition against some competitors, and they were losing some deals against some competitors because of that. That's one. And second, it's the cost of maintaining this product. And in payments, because payments is a very heavily regulated space, you have regulatory updates and maintenance that you must. What's happening now with SEPA instant payment becoming mandatory is one of such cases where the regulation and your customers force you to maintain, but not only maintain, but also update your product. So further invest into your products. And Mambu knew that this was not a good investment because the base product and the foundation were not strong enough. So I think that's the rationale on their side. Internal rationale. And then
Mm-hmm.
externally, we did not want to sell. We did not run a process. We had plenty of cash. We also had some investment offers. And I think that us having investment offers was also a catalyst, because if we had taken additional investment,
Okay.
most likely have delayed, probably indefinitely, a possible acquisition of Numeral. So I think it's helped accelerating the process.
Okay. And so for you, so well, they sort of made the first move. Once you had some, let's say, strong conviction or at least strong signals that they were really interested, did you go, and approach other players to understand if they could be interested in acquiring Numeral 2 and to try to understand some form of a price point as well? Or did you only speak to Mambu and said, okay, it's either Mambu or we go our own way and we raise the funds you just mentioned, etc.?
Exactly. No, so we did not run a process except for the dual track Mambu M&A and VC fundraising, but we did not go to any other potential acquirers.
Mm-hmm.
One, because we did not, for a few reasons. One, because we felt very strongly that Mambu was the most natural acquirer, from a company profile, from company culture perspective as well. That's one. Second is that because we did not want to sell, it was not our initial plan. We did not want to send any signal to the market saying that we would consider selling. Because when you send the
Mm-hmm.
signal, it's out there and it's fairly difficult to. And the last reason is that, we had plenty of cash and we had investment offers. So
Mm-hmm.
if this acquisition had not worked out, we would have continued building Numeral as a VC-backed company, and it would have been a different journey. And there are some pros and cons to each of these journeys, but it would have been totally fine.
And so yeah, so the exit happened quite quickly after you raised and even after inception. So how did your investors react when you told them, look, there is that business, like relatively long time partner that wants to acquire us? How did they react? I mean, because I guess for them they are essentially onboarding for a massive, let's say, roller coaster, or at least on a rocket ship. Telling them, the sort of adventure is over for you now. I mean, how did they take the news?
Yeah, that's a good question. I think we collectively came to the conclusion that it was a very good output and a very good way to further develop the business. I think that the realization we came to over like 2023 and most of 2024 is that we are a bit capped in our growth by our market and by our product, our market, and our company profile. Our product is payment infrastructure, so complex product which is business critical product for infrastructure for most of our customers. So it takes time and money to build it. The second is our market. We sell to fintechs and PSPs and banks. And within these three segments, the banks are by far the biggest segments, and they are not the easiest buyers. They take time to buy, they take time to deploy. And it means that, and first, a company profile, we are still a fairly small and young and unprofitable company. And when you take these three dimensions, it was difficult to have the explosive growth that you would want to have as a VC-backed company. Not that we are not growing, we are growing quite nicely, but we are not on the next year-on-year growth trajectory that some VCs might expect at the beginning. And for reasons that were mostly out of our control. The fact that we are a 3-year-old company, a 30-people company, an unprofitable company, all of that, we could not change it overnight. I mean, there are not so many ways to become a 10-year-old company. Either you wait or you become acquired by a 10-year-old company, which is what we did. We saw in the acquisition the opportunity to completely shift the company profile and go from a 3-year-old company to a 10-year-old company, from a 30-people company to a 600-people company, from an unprofitable company to a profitable company, and from a company that was only present in Europe to a company that's present in like virtually any country of the world, and to really accelerate growth. We've seen it as this only one hack to hyper growth.
And so you've seen that growth rate increase substantially since you got into Mambu. You've seen this
very much. We've added, so by the end of the year, I mean in 2025 only, we will have added roughly twice as much AR as we've added in the first 4 years, 3 years and a half leading to the acquisition.
Okay.
So we do see the acceleration, and we do see that it's easier to sell to bigger customers, and it's easier to sell at higher price points being part of Mambu.
Okay, great, great news. And so, like personally speaking, maybe like so Mambu announced like Mambu Payments. You know, how much of the DNA from Numeral is within Mambu, and for you, you know, how did you adapt, let's say, to a new environment, new culture? Maybe, not being the master on board. Let's say, like, so how did you adapt? I think for a lot of founders, entrepreneurs, imagining like a place where maybe you'll have a boss is hard sometimes. So how did you deal with?
Yeah. So Numeral, Mambu Payments, DNA. So the product is the same. What's called Mambu Payments is Numeral as a product. What's changed is the brand. The brand, I mean, as a founder, the brand is something that you cherish as much as the product, as much as the team, as much as the culture. The brand was very important to us and also key to our early success, I think. So, of course, seeing the brand go is a bit sad, but we do it for good reasons. We do it because the Mambu brand is much stronger and is enabling us to grow much faster. So we can be sad, but we should not be too emotional about it. And then when it comes to the role, it's true that it's a big change for me. And I think it's a change at 2 levels, maybe 3. First, it's a change of scope. No longer being CEO means that my scope is reduced, and I'm currently managing product, engineering, support, and delivery. So the scope is reduced, but the scale is much bigger. The scale is much bigger because we have a bigger team, because we have a more global team, because we have a bigger customer base. So my impact is different, but is not smaller than it used to be probably. And then I think the first change is the change of culture. As much as the culture there are similarities in the cultures, there are no two companies with the exact same culture, and you need to adapt. And you also need to infuse your own culture into the company that acquires you. And culture is something very organic. It's very fluid, and you can take, you can give. And I think that's what we do on a daily basis, just by trying to operate as we've been operating since the beginning of
Okay. Maybe looking ahead, so I mean, the European Commission is preparing new regulations and new directives. So the latest in the process is PSD3, so Payment Services Directive 3. And new payment rules really to modernize and unify the entire system. Maybe can you explain a bit the history on those directives, what they mean, and also explain why payment is so important as, you know, maybe some strategic assets. I mean, in Europe versus who really? So yeah, what's the strategic role of payments? I mean, the business world in general.
I think when we look at a lot of like EU regulations, very often they are driven by two things: customer protection and two, free competition. And PSD3, and there are some adjacent regulations like IPR, instant payments regulation, very much promote these two. Free competition, there is something that's very important for the regulator, and is to create a level playing field across all participants. And we've been discussing fintechs and PSPs and banks. Up until PSD3, only banks could directly access the payment networks, the clearing houses. And if you are a fintech or a PSP, you had to go through a bank to access the clearing houses and send and receive payments, meaning you are not sitting at the exact same level as them in the value chain. You are relying on them, on their own compliance appetite, on their own systems, on their own pricing. So you're not really competing equal to equal with these banks. And this is one of the things that PSD3 is changing. The
Mm-hmm.
second thing that PSD3 and IPR is changing is customer protection. With instant payment, we've seen a drastic increase in what we call push to pay fraud, and instant payments being instant, 10 seconds, and being irrevocable. We've seen very strong increase in fraud. So PSD3 and IPR introduce what we call verification of payee, which is the ability for the customer, and it's actually mandatory for their payment service provider, their bank, to verify the name of the beneficiary before sending a payment, to make sure that you are sending the payment to the right person and that you are not being phished, sending money to a fraudster when you believe you are sending money to your landlord.
Mm-hmm.
So these are some of the changes introduced by PSD3 and IPR, both for consumer protection and free competition.
Okay. And so why is it like a strategic infrastructure? So or like payments? I mean, if we have like a unified infrastructure in Europe, does it makes Europe stronger versus, I don't know, the US, Asia, or, and if so, why and how?
I think SEPA is the direct translation of the single European markets. You
Mm-hmm.
have one market, you have freedom of trade, goods, services, freedom of moving across countries as a company, so operating from one country to another, or as an individual traveling to another country without a passport or a visa or any form of authorization. That is the exact same for money and for payments. So I don't think you can have a single market and you can have euro if you don't have SEPA, and if you don't treat
Okay.
Europe as a single payment area like it is with SEPA.
Okay, understood. And so looking back at your journey, so you've had like the entire full cycle of for entrepreneurs, founded like the company, raised some money, exited the business super quickly. I mean, what are maybe like the key lessons you'll retain from that journey, like the things you would do again for sure, and the things you would absolutely avoid?
I think everything I would do and avoid is related to people. And everything I would do is hiring the right people, meaning the people that are as excited as you, as caring as you, and
Hmm.
as ambitious as you, and avoiding hiring people that don't fit this this description. And it's by no means like a judgment or value or anything, but you need to be aligned in the ambition and how to do things with the people that you hire. These are the people that you work
Is this
with.
something you learn from doing, let's say, bad recruitments, or is it something you discovered because maybe you run, you know, you are in the excitation, you run some recruitment processes, interviews, you have someone you like, but you made an offer, and then 3 months in, you're like, actually, it doesn't fit at all. That person wants something completely different, and we are not aligned. Is this something, essentially, like looking back, you knew from the interview process, or is it something you discovered?
I think it's a bit of both. I think that very often when we had a doubt, the doubt proved to be right. When we've hired the person, it was eventually not a great fit. And for the people that were a great fit, we see it on a daily basis, like how much we enjoy working with them and how much we grow with them and how much we progress with them. I think it's, when it's not a fit, you see it. And when it's a fit, you see it even more.
Okay. And so on, let's going back a bit on the technical aspect. So before you founded Numeral, you had some experience with payments, IbanFirst and also Jumia, when you essentially set up like payment processes, etc., internally. Do you think for those sort of businesses that are quite technical, someone outside of the space could, maybe after some homework, spot a need and then be the right person to pull off a product vision and to execute on the product? Or is it something which is, let's say, reserved to people who are insiders?
I
You
think
were an
so.
insider somewhere.
Yeah, I think for the founders and the initial team, like the first few people in the team, you need people that are very technical, very knowledgeable, that have lived and resolved the pain themselves. Maybe for the 5 to 10 first people. Then for everybody that comes after, you don't need it. I mean, some of our best product managers and software engineers and even product marketing managers and account executives had never worked in payments before, and they've learned. They've learned because they were curious, because they were capable of learning, and also because we've invested a lot into not training them per se, but creating content and researching and creating content that they could use to learn and to become knowledgeable about payments. I
Mhm.
think that if you only hire people that have done it, so first you restrain the pool of talent that you can hire from a lot, and you might not necessarily bring the creativity that you also need to build something different. Otherwise, we just
But really, do you think like, okay, so you were like an insider. So let's say, do you think like someone like me, completely outsider? I mean, as I told you, what I know is essentially payments is when I tap my card on a terminal and that's it. Do you think that, if I have some appetite to learn, would it be possible for someone like me, not knowledgeable, to maybe after a few discussions discover like such a problem and to say, okay, I will surround myself with the right people, etc. But is it just possible, in your view, for an outsider to work on something, let's say, very technical, as the payment infrastructure?
I mean, everything is possible. Everything is doable.
The
It might
entrepreneur
just
is
be more
speaking.
difficult. No, but it might just be more difficult. But the thing is that with our product and with our buyers, it's a
Mhm.
technical product and it's technical buyers. So you need to show some expertise because you build trust through expertise. At the end of the day, they will run the entire payment infrastructure on your product. So they must trust you. Then it's a matter of how do you build the trust, and building trust is not one single discussion or one single factor. And it's not only being knowledgeable. In our case, it was also the brand. It was also the funding. It was also the first customer. So it's a combination of many different things. In isolation, they are not enough. But when you put them together, you start to have something.
Okay, got it. And so on the fintech space in general, so not necessarily payments, and over the past decades or even more, I mean, we've seen a huge amount of money invested in the fintech space. Just a few essentially end up being, becoming big companies, etc. Which, I mean, if we could assume that a big chunk of those companies are essentially more small, medium-sized companies, do you think there are a lot of them that are, being profitable or very close to being profitable and would just continue their life like this, or they will essentially die one after the others and will join the startup graveyard?
So I think that like financial services in general are one of the biggest markets globally. So there is a lot of value being created and value that can be captured. The thing is that building a fintech is hard, takes time, is expensive, it's financial services, it's regulated, there's a lot of compliance, there is a lot of operations. It's very difficult to have an explosive growth, and only the best of the best to have an explosive growth. And if you look at France, it might be Conto, Revolut. If you look at the UK, Revolut, Monzo, maybe a few others. Only the best really explode. Then can you build some profitable businesses if you're not the biggest? Definitely. I think it's a matter of building a healthy business with healthy margin profile, investing as you grow, more than investing massively ahead of growth, like many companies, mostly including fintechs, have been doing like a few years ago.
Mm-hmm.
But yes, then the question is valuation, liquidity, what's next once you've raised funds. But I think that's more of a problem for the VCs than for the companies, really.
Okay. Well, listen, Édouard, many thanks for your time. I think we can wrap it up. So thank you again for sharing all those, crusty information about your journey, etc. It was a pleasure. And I really hope to have you maybe in the near future for another chat.
Thank you, Thomas. It was a pleasure chatting. Soon.
Cheers.